The downside of status 53, uncollectible status, is that the IRS will still file liens in this process. If you owe more than $10,000, they still have to collect and protect their interest in any property that you have, and that debt, or excuse me, that lien will stay on conceivably during the whole time that you're on uncollectible status. Same thing for the tax debt itself. It just hangs out. It doesn't go away, which is a downside. It just kind of hangs out there collecting penalties and interest while you are in this safe harbor. Other downside, it may trigger a trust fund recovery penalty assessment. And what that means is if you're a small business owner, or a large business owner for that matter, and you have payroll debt, the IRS can come after the responsible persons for that tax debt. It's anywhere from 40 to 60% usually of the whole payroll tax that can be assessed against the owners, the responsible persons at the business. And same thing is really like liens. The IRS wants to go ahead and get its assessment out there against the individual owners of the business, even if those owners may not be solvent and collectible at that time. So IRS has to protect its interest there. They will still do trust fund assessments. The biggest one, though, is that the tax never truly goes away while you're in that status, unless the collection statute expiration date happens to run. And it does run the entire time that you're in status 53, and if the collection statute expiration date passes while you're in status 53, well, then so be it. The tax essentially just gets forgiven. But again, that CSED is 10 years, so the IRS has plenty of time to do collections there, and is usually quite content letting the penalties and interest just continue to run.